In a Gazette notice Thursday, National Treasury CS Ukuri Atani made good the President's directive by gazetting the amendment of the VAT charge from 16% to 14%. While this benefits the consumer of affected goods and services, it has no benefit to businesses as theirs is a duty to collect revenue for the government. But for the government, it is an alarm to expect reduced revenues. Starting Wednesday next week, workers will enter a tax regime that is friendlier should all other things remain constant. All Kenyans earning 24,000 shillings a month and below will have their taxes waived. Businesses and companies that pay the 30% corporation tax on profits will also benefit from a reduction to 25% upon endorsement by Parliament. For workers earning 24,000 shillings, they have been paying tax of 1,546 that now will not be taken away. Those earning 20,000 shillings per month, 946 shillings will be the benefit, while those earning 15,000 shillings will not be required to pay the tax of 196 shillings. Workers earning more than 24,000 shillings will continue to pay their taxes as usual, only that those above 42,000 will have the excess of that, charged 25% tax instead of 30%. For instance, a person earning 50,000 per month currently pays tax of 7,596. Upon the enforcement of the presidential directive, their tax paid will reduce by 351 shillings, enough to buy bread for a week. Though in the minority, those that earn 100,000 shillings and above per month may have better days ahead should their salaries remain intact during the COVID-19 disruption. For someone who earns 100,000 shillings, their tax due is currently at 22,500 shillings. This is likely to reduce by 2,851 shillings. Persons earning 150,000 will benefit by 5,351 shillings reduction in tax due. For earners at 200,000 shillings, their tax liability currently stands at 52,500 shillings. This could reduce to 44,700 shillings, accruing a benefit of 7,800 shillings, enough to pay a domestic worker minimum wage. Above that, it even gets better. For workers earning 300,000 shillings, the tax burden could reduce to 69,745 shillings from 82,500 shillings. For one who earns 1,000,000 shillings a month, the additional tax relief will be 47,850 shillings. While this may be welcome news for Kenyans whose future is uncertain economically, the government is just about to sign off reduced revenues. In the current financial year, the income tax target comprising pay-as-you-earn on workers and companies tax had been set at 780 billion shillings. Import duty that will now be greatly affected by reduced import traffic and economic activity had been set at 120 billion shillings. Excess tax had been set at 210 billion shillings. This is likely to be affected by economic slowdown. Banks and financial institutions have already scrapped various transaction fees, meaning zero or reduced excise duty to charge. This may mean review of government programs as contained in the fiscal budget for this and the coming financial year. Sam Gituku, Citizen TV, Nairobi.